In this video, we are going to begin looking at Chapter 36, which is on the federal budget. So just like in the last two chapters, where first we looked at the Federal Reserve and then monetary policy, we are going to be looking at the federal budget in this chapter, and in the next chapter we're going to be looking at fiscal policy and the relation between the Fed and monetary policy and the budget and fiscal policy are essentially the same. I mean, the budget kind of, well, what we're going to be talking about now, let's just take that. Let's take that from the top. In this video, we are going to begin discussing the federal budget. All right, so this is Chapter 36 in our books, and what we're really looking at is the policies around taxing and spending. So this chapter is going to pair with the next one, which is fiscal policy, just like our chapter on the Federal Reserve paired with monetary policy. So policy about spending and taxation, that is fiscal policy. All right, and so what we're going to be looking at in this chapter is the tools available to those that are going to make those decisions. All right, so we're going to start by looking at we're going to be looking at the major sources of tax revenue. All right, so we are going to be looking at taxes first, and then we will move on to spending. All right, and I'm going to put up some percentages for these different sources of tax revenue. These percentages are from 2008. All right, the first major source is the individual income tax. And this makes up of 51% of the federal budget. So 51% of the money that the federal government collects, right, through all of their different taxes, right, 51% of it is from the individual income tax, or just what we think of as payroll taxes, what we pay at the end of the year, what we're having to do taxes for at the end of the year. The second is Social Security. Medicare, really just Social Security and Medicare, we can leave it at that. All right, that comprises 35% of the federal budget. And then last, I won't say not least, because it is least, empirically it is the least important one, is the corporate income tax. And that makes up 6.2% of the federal budget. All right, so keen-eyed observers will notice that this doesn't quite add up to 100%. There are some other types of taxes that are in there. They're just not the major sources of it. Right, or major sources of tax revenue, I should say. All right, but these are the three that we are going to focus on. We're going to spend most of our time on individual income tax. That's what we're going to do next. And then for the Social Security and Medicare and the corporate income tax, we're going to spend a considerably smaller amount of time on those. All right, so with the individual income tax, these are most of these taxes get taken out of our paychecks every time we get paid. But this is one of the big ones, and this is what our income taxes are revolved around, right? Or when we're filing income taxes. So there are a couple of different things that we want to kind of pinpoint here. First is the difference between the marginal tax rate and the average tax rate. All right, so your marginal tax rate is the tax rate paid on an additional dollar of income. All right, so if you earned one more dollar, how much, what's your tax rate on that? So as you're going to see in a little bit, I'm going to put up some of the tax brackets. Also, I'm going to post a PDF or something with these tax brackets in there. The way that your income tax is going to be calculated is you have a tax rate for these different ranges of income, all right? And you pay that percentage of tax on that range of income. If you go to the next bracket, you pay that percent only on the income that falls into that bracket, all right? That is your marginal tax rate, all right? This is distinct from the average tax rate. All right, and our average tax rate is the total tax payment divided by your total income. All right, that is what our average tax rate is. So when you are kind of looking at your tax rate, a lot of people think that whatever bracket you fall into, that's what percentage you pay on all of your money. That's not true, right? For an overall tax rate for how much you're paying kind of on, as an average, right? This is the way we would do that. And we're going to look at all of this in an example format. That might, depending on how long it takes us to get through everything in here, we may or may not get to it in this video. But let's move on. So the next concept is your taxable income. Right? So just because, that's a bad way of saying it. Right? You do not pay taxes, or it's very unlikely that you are paying taxes on every dollar that you earn, right? And so we need to figure out, well, how much of your income is actually being taxed, right? What amount is the government going to kind of try to take out of, right? And that is your taxable income. All right, your taxable income is your income minus any deductions or exemptions. All right, so there's a myriad of deductions and exemptions that are out there. We're not going to go through all of them. I will mention the standard deduction. So in most cases, you can either kind of do an itemized deduction. So if you've got a bunch of charitable, donations, you got a bunch of other things, work expenses. These are kind of things that are taxed or deductible. If you have a bunch of those, you might do an itemized kind of deduction where you put in each individual thing that you are trying to get a deduction for. However, probably for most of us, we aren't going to have that many of those, and what we're going to go with is the standard deduction. So as of, I think I wrote this stuff down in 2019, but I doubt it's changed that much, right? But just a caveat in case it has. All right, so if you are filing, so if you're a single filer, then the standard deduction is $12,200. If you are married and filing jointly, your deduction is just double that of the single. And if you are head of household, then the deduction is $18,350. All right. Again, there are other deductions, but this is the big one. And you will see, right, that we've broken it into single, married, filing jointly, and head of household. And that's also how the tax brackets are broken down. All right. We're going to see that later on. All right. So depending on circumstances, right, really just kind of your marital status and some other things, all right, that's going to determine how you are going to be filing. Right, so that is your taxable income, right? And then based off of that taxable income, we're going to find the tax burden. So our tax burden is how much of an individual's taxable income is owed in taxes. All right, so this is not actually what you're going to pay in taxes in many cases. We're going to talk about that in a little bit, but kind of seeing how much you know, without these extra things that we're going to talk about in a little bit, how much are you going to owe? I think you'd also think of it as your tax liability. I prefer tax burden. How much are you being asked to pay in taxes? All right, so that is our tax burden. As I said, that's different from your tax payment, so how much you are actually paying in taxes. All right, your tax payment is the tax burden minus any tax credits. All right, and tax credits reduce your tax burden. You probably figured that out from the fact that we said minus. So with this, with our tax credits, right, these come directly out of how much you are supposed to pay in taxes, right? So there's a distinction between a tax credit and a tax burden. A tax credit and a tax deduction. Right? A deduction is going to reduce your taxable income. A tax credit is going to say, here's how much you owe in taxes. We're going to credit you this amount. So it's almost as if you paid that portion of your tax burden. Right? So if we have a credit and a deduction that are the equal amount, so let's say we have a deduction for $1,000 and a credit for $1,000, the credit is going to be the better one, right? That's going to save you the most money because with that deduction, right, you wouldn't have lost that entire $1,000 to taxes, right? You'd only have been taxed a percentage of it, right? And you would have gotten to keep the rest. So you only get kind of back, right? The only benefit is that amount that would have been taxed. With the tax credit, that's just kind of an extra $1,000 that we get. All right. There are also a bunch of different tax credits. We'll just quickly talk about a couple of them, maybe in vague terms. But if you go onto the IRS's website, which I know we all frequent that website because it's a very fun website, you can find a list of tax credits, right? There are things like the earned income tax credit, which if you kind of make a certain amount of money, kind of the tax credit increases as you continue to earn that money. So that's kind of more for lower income. So to encourage, to incentivize people to work, right, and to give them a little extra help in kind of making it through. Right, there are also tax credits for education. I think the one is kind of the American Opportunity Tax Credit, I believe is the name, and then there's another one that I think has DREAM in it. But regardless, those two, one of them is for the first 4 years that you are in college, or you can use it for 4 years. That's how many years you can use it for, and that's a better tax credit. It's more money. And then the other one is for any years after that. So once you get through those first 4 years of school, and you've used those tax credits, if you continue going into school or if you go back to school later on in life, right, then there's still a tax credit for pursuing education. All right, but those are just a couple of examples of tax credits. And again, there are many more of those. All right. But we will go ahead and end this video right here. In the next video, we're going to take all of these concepts and we will look at those in terms of an example. So in that's when I will actually write out everything, so you guys don't have to sit there and watch me write it out. I'll just write it up in between takes, right? And then also I'll just remind you of that other thing, the PDF that's up there. All right, so we're going to do an example in the next video. We might also look at the other two types depending on how long it takes us to work through those examples. All right, but that's it for this video, and I will see you in the next one.